On today's episode, we are going to take a look at Beyond Meat. The stock price ended up 10% up today after some recent news. And on today's episode, we're going to take a look at recent news. We're also going to take a look at one thing I really like about Beyond Meat. And also, we're going to take a look at some stuff I'm not a huge fan of. So let's get started. All right, so like I mentioned, today we are taking a look at Beyond Meat. This is traded under the NASDAQ as ticker BYND. The current market cap of the company is $7.4 billion. And like I mentioned, it was up 10% for the day. But don't let that 10% fool you. We can see from its 52-week high, the stock is down roughly about 40%. So the stock has definitely seen a crazy correction, and we're gonna see in a bit why. But first, let's take a quick look at why the stock price is up today. The main reason, outside of just growth stocks, had a great day today. An analyst did come out this morning giving an upgrade to Beyond Meat, upgrading it to outperform. The price target they set for the next 12 months was $130. The main reason for the upgrade they mentioned was that Beyond Meat did have a rough go due to the pandemic, and we're going to see a good portion of this company's revenue comes from restaurant business. So now they expect that as restaurants start opening back up, the overall growth for Beyond Meat is gonna come back as well. So now let's take a look at the main thing I like about Beyond Meat, and that's just the overall expansion this company is seeing. I feel like every week we see a new report about Beyond Meat being available in the new store, in the new product. I mean, let's just take a look at recent news since April of 2021. The most recent was today. Beyond Meat said Monday it is working with Tesco to launch a line of frozen ready meals in the UK this week. Next, May 17th, Pizza Hut Canada partners with Beyond Meat to launch the Hut's first ever plant-based protein Beyond Italian sausage. And they're gonna have new menus from a Beyond Pizza, from a Beyond Flatbread, and a Beyond Meat Alfredo pasta dish. And if you guys want to keep learning more about growth stocks, make sure to hit the subscribe button, the thumbs up. It really does help with the overall channel. And let me know in the comments, what is the stock you guys want me to look at next? On May 12th, Beyond Meat expands its presence at Walmart with the launch of Beyond Meatballs. This rollout is the second major Beyond Meat expansion at Walmart in 2021, following the launch of the Beyond Sausage earlier this year. I guess they're seeing some great numbers in Walmart right now that they are launching the second product. On April 27th, Beyond Meat announced their new Beyond Burgers that's launching at grocery stores nationwide. On April 15th of 2021, Beyond Meat announced a partnership with Carl's Jr. for the first ever plant-based meat menu takeover. On April 12th, Beyond Meat announces major retail expansions throughout Europe. On April 8th, Beyond Meat expands US retail distributions within multiple national and regional grocery chains. On April 7th, Beyond Meat opens a world-class plant-based meat manufacturing facility in China, so we can see the amount of growth this company has seen in the past 2 months. Now, if we take a look at their most recent earnings, which they reported on May 6th of 2021, Beyond Meat reported first quarter increase of 11% compared to the same time last year. So for those that are not familiar with Beyond Meat, they made this most recent quarter, they made $108 million. 80 million of that comes from United States. So a big portion, a little bit less than 80% of total revenue comes from United States. The other 20%ish or so comes from international. So United States domestic is a good portion of this company's total revenue. They did see about a 26% decrease in the food service. This is the restaurant business compared to the same time last year. They did see an increase of 27% on the retail side here in the United States. So they're still growing pretty strong in the retail side. And now as restaurants begin to open back up, analysts believe that this food service growth is going to continue and really drive the overall returns for the stock. I mean, just look at this. In the international segment, food service is down 44% compared to the same time last year. It has definitely taken a hit from closing of restaurants due to COVID. Now, I want to take a look and mention one of the things I'm not too happy about from Beyond Meat. It doesn't say I don't mean this in a negative way, but it's just something if when looking to add to a company, we also have to look at the negative side to understand the risk. But before I do that, let's take a quick look at today's sponsor. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. The first thing, this company is not GAAP profitable and they're not positive in cash flow from operations. They're not expected to be positive in cash flow from operations anytime soon. So a company like this, I would want them to have a very, very strong balance sheet. And Beyond Meat doesn't really, even though they have about $1.1 billion in cash, they do have about $1.1 billion in debt. I'm pretty sure most of this debt is long-term of things. But when a company right now is not profitable or positive in cash flow from operations, I would want their balance sheet to be a lot stronger. So that to me is the biggest thing. I'm not too happy about the company, right? This is a growth stock. And normally with growth stocks, I understand that they are still expected to improve their margins. They're expected to become profitable in the future. But while they are expected to do that, I expect them to have a strong balance sheet. So let's say I was bullish in Beyond Meat, how would I play it? First, let me put it in the tier level. Beyond Meat, I don't think can ever be a tier 1 in my portfolio. It can't be a tier 2 in my portfolio either. This doesn't mean it's a bad investment, it's just not an investment for me. If it was to ever enter my portfolio, it'll be somewhere between a tier 3 or a tier 2.5. But right now, if I did like it, and with the overall correction that we're seeing right now, I wouldn't mind entering in Beyond Meat in the medium-sized position of a tier 2.5 if I really like the company, and add up over time until it became a full position. So I hope you guys enjoyed today's episode. Like always, make sure to hit the thumbs up. Take care and see you next time.